Good day, fellow investors. Meta Platforms, Facebook is a covered stock and part of our YouTube portfolio, so we'll update twice a year on earnings and on significant happenings. If we check the stock price, it's actually, I think, the best performer in our portfolio because I also invested most money in the Meta Platforms because from a risk reward at 158, it looked like a very positive risk versus reward, but let's look at the fundamentals as it doesn't look as a great long-term investment, maybe too much risk as it is as a short-term trading bet, and that's why I took a larger position. So the stock performed terribly over the last year, so 50% down from a lot of love in 2021. Really, it came to a lot of hate, and suddenly from a growth stock, loved growth stock, it became, especially here, a value stock where too cheap PE ratio. Here it was still all about growth, here it was all about PE ratios. But let's see how the fundamentals, it's not more a growth stock, changed, and how perhaps also the investors had to change. And when that happens, you see these big declines in growth stocks, and now the question is how it will evolve over time. Let's take a look at earnings. So the earnings are just out a few days ago, and if we look at the slides, we can see that Facebook is not a growth stock anymore. It makes a lot of money, 28 billion in revenue, but when we compare quarters, there is a decline in revenue. So Facebook, no growth now. And then if we look at net income, costs are going up and there is a huge 35% decline in net income. That is also significant. So we cannot talk about Facebook as a growth stock if this doesn't revert. And if we look at earnings per share, I must say that a year ago, as it was a growth stock, I expected that these earnings will be $15 per share. However, the reality now is that those are $12 per share. No growth there anymore, and maybe if the trend continues for 2022, we'll see it down to $10 per share. So the P ratio won't be that good if the fundamentals continue to deteriorate. Now, Facebook continues to advertise revenue per person, the number of persons, but we see that it is less per person, which leads to the question, okay, daily active users, monthly active users, all well, but we see a decline in Europe, we see a small growth in US and Canada, but the question here is, what's the time spent on the app? Not really how many of you. Okay, everyone will check their Facebook, even if I'm doing it less and less, but how much time is spent compared to others? And just to finish on the earnings with the cash flows, those are also going lower, so they might have to adjust buybacks, they might have to adjust investments. They said they will slow down with investments because if you look at the conference call, okay, Reels growth not yet monetized, but they say they are in an economic downturn and they are also seeing more headwinds. So growth of the short form video, so TikTok is destroying Facebook, especially in under 30-year-olds. The Apple changes that has eliminated a lot of flow for Facebook. And then, of course, they are betting everything on the metaverse. And that's something that we have to see how it will work. For now, we have a stagnating business that is betting everything on something down the road, 5-10 years, long-term process. And unfortunately for Facebook, declining numbers with a lot of competition from other platforms. That's Facebook. And if we look at the questions, those were really ballsy analysts, I must say, with the questions. So the first around engagement and overall time spent, they don't want to disclose it, but great question by Brian here. Then another Justin Boom question. In the headwinds, you didn't mention TikTok. So why didn't you mention it? Then they again try to avoid sandbank something. And if you read it, you have this transcript on Facebook. You will see how they are trying to avoid the tricky question and then focus on what they do. Also, then a great question on buyback. Will it slow down? Won't it slow down? They will just continue doing. They have slowed down some investments, so that's already something. And that's the earnings, not great earnings, something always projected in the future. And then Facebook is also turning to what other companies have been doing, and that's the bond market. Facebook has issued a bond, now it's going into debt to keep doing the buybacks, to keep doing the promises. So taking debt and not cash flows, which means they are risking much more and changing the structure of a debt-free business. So they are playing the Wall Street game, and when a business starts playing the Wall Street game, yes, it can do well for a while, but for me, it is another small increase in risk. However, if we look at valuation on our intrinsic value table, download in the description below, here we have Meta platforms. If we look at earnings, and the question is, what will be earnings? Now earnings are 12.2. So yes, intrinsic value for a 10% return, 153. If the terminal multiple remains around 20 and they grow 6 to 5%. If they grow faster, 7 and 10% and higher terminal multiple, then the present value is 241, so better than the current stock price. But if it becomes a stagnating business and grows just 3% ahead, terminal multiple goes to, let's say, 15, 12 is a little bit low, then there is still plenty of room for going lower. But if the market expects now and it gets some traction towards the end of the year, and let's say there is 8% growth, and then the market expects 12% from the metaverse growth, and then let's say even a little bit more, 3% growth from buybacks, then you see that it could be better valued even if at lower earnings, if that continues. But if we get 9 here, then again everything would change and the risk is pretty big. But the market now is focused on positivity, exuberance. That's also what I'm looking. So it is in the positive, but I'm really weighing, okay, how far? Let's give it a quarter or two. Can it be more positive? Yes, Mark Zuckerberg is saying yes, some changes, comparatives will be without the loss from Apple business. So if that can rebound the stock, bottom it up, then we can make that risk reward short-term trade that Facebook looked really good and perhaps still is a rebound. We are now at 180, maybe to 200 something. This would be a little bit exuberant, but maybe above 200 for the good risk and reward call when we bought here at the bottoms to, let's say, take advantage of this. So for now, nothing to change here, but if it goes a little bit more higher, I will start managing the risk here and then see how it evolves over time. That was the risk and reward. Still looks okay, still a hold for me, and now we'll see how it goes here in the portfolio. Subscribe if you enjoy these updates. We'll put 20-30 stocks in the YouTube portfolio. Will be great educational purposes. Thanks for watching, and I'll see you in the next video.